now to talk more about the market is John Velis, America's market strategist for NYSE-listed investment bank, BNY. John, thank you so much for joining. It's great to have you here in studio. And what do you make of this market right now?
Well, I am amazed at how much optimism there still is in the market. Now, I realize that things could have been much worse, like they looked like they were getting in April. The macro data has held up pretty well, which has also sort of solidified markets. And then there's the tech-driven rally is still really going in full force. But what I'm worried about is the complacency and sort of the idea that tariffs are a free lunch and that no one's going to get affected by them somewhere or the other in the production or in the supply chain. So I think markets are, I wouldn't say ahead of their skis, but they're really pricing in best outcomes, and we wonder if there's some risks around that.
Interesting. So I think probably the next big item on the horizon is this earnings season set to kick off in a few days with NYSE-listed Delta Airlines. The banks will follow. Holistically, when you look at earnings, how could that impact the direction of equities?
Oh, I think it'll be a really big and important season, particularly on margins, right? We know that firms are either going to have to pass on price increases from tariffs, or those that do a lot of imports are going to have to eat them, and that'll erode margins. So we want to hear how margins are holding up, particularly in industrials, consumer sectors, things that really touch the real economy, the nuts and bolts economy. And we want to find out how much uncertainty has sort of come down. Some of the measures of policy uncertainty were really sky high just a few months ago, and they've come down. They're still higher than they normally are, but things are a little less uncertain, and I want to see how the firms deal with that in their statements.
Tariffs, of course, taking a new direction, even just in the past 24 hours or so. That July 9th reciprocal deadline pushed back to August 1st, still open-ended as to which countries actually perhaps do negotiate with the president, according to President Donald Trump there. How are firms navigating that? What does that mean for investors?
I think, what you need to look at firms, and we'll see this in the earnings season, are their capital expenditure decisions or their hiring decisions being affected, being delayed, being made more uncertain because of the uncertainty still with tariffs. Here we are on the eve of July 9th, and we actually have until the beginning of August in some cases for potential changes in the letters that were sent out yesterday. So that kind of uncertainty, it was started before April, then we had April 2nd. So it's been 6 months of this sort of what's going on with tariffs, and I think it's very difficult to price and difficult to plan for.
Yeah. Artificial intelligence has been one of the hottest topics definitely here on the street for a few years now, really, since ChatGPT and OpenAI got out of the gate several years ago. Are you finding that that is still a hot play when it comes to investment strategies?
Oh, very much. Now, we had seen a reallocation out of the U.S. in around January. It picked up in April into Europe. But Europe doesn't have the AI story, right? So what we've seen is sort of this leaving the U.S. temporarily, reallocating to Europe and developed APAC, and coming back to the U.S. because the AI story is here and in China, not so much in Europe. So I think we've seen some reallocation zigzags, driven in part by the AI story that's prevalent in the U.S.
Interesting. So the jobs market clearly holding up, inflation seemingly coming down. Is it your expectation that inflation could rise due to tariffs?
I think so. I think that, like I said at the beginning, someone somewhere has to pay for this. Either the firms are going to pay this with lower margins, which would be bad for the equity market, or consumers are going to pay for this with passed on price increases, and that's going to reduce real incomes and make consumer choice a problem. So I don't think we're out of the woods, and I think that's why the Fed's on hold.
Takeaways from the FOMC and how Fed Chair Powell navigates this.
Well, the real problem for him is the continuing drumbeat of criticism he's getting from the administration. I think his solid argument about why we're on a wait-and-see approach is valid, and I think the jobs data, kind of underscored that last week.
Market moves in terms of the currency market. What are we seeing on that front?
Very interesting. We are the largest custodian in the world, so we see $52 trillion in assets every day flowing through our pipes, and we've seen massive forward selling of dollars since about the beginning of May. That really corresponds well to dollar weakness. Now, if the U.S. economy doesn't look like it's going to weaken and interest rate expectations go back up or don't come down any further, the dollar could find a little floor. But generally, the relentless forward selling of dollars to hedge U.S. asset exposure as investors come back into the country is something that we've been seeing, and that's what our biggest sort of factor for driving the dollar lower has been.
Do bonds look attractive at these levels?
Risk has come down. The MOVE index is much lower than it's been. I think yields could still be a little higher. I'm not sure if foreigners, when we think about how much of the big beautiful bill will need to be financed and at what part of the curve, we'll see if foreigners find pricing acceptable or they feel like they need some more concessions to come in and finance the deficit.
Okay, credit spreads, the last topic that I want to hit on here.
Yeah.
What can you tell us on that front?
Very tight. Implied default rates backed out of those credit spreads are very low for this part of the cycle. I wouldn't necessarily put new money to work in credit, but I think it's a fairly safe asset class considering the volatilities and the structures of the markets.
John, thank you so much
Pleasure.
for joining. Anything else that you can share with our viewers?
Yeah, it's going to be a volatile summer. I don't think it's over. I don't think April was the height of it, and I think that we're going to have more things happening in July and August. And keep nimble, and as we always say, keep your head on a swivel.
All right. Thank you so much for joining. John
Pleasure.
Velis there with BNY. We appreciate it. He's America's market strategist for NYSE listed investment bank BNY.